Hello, this is Tom Cloud with this week's Precious Metals Market Update. I want to jump right into what happened on Friday when BlackRock suspended money coming into GLD, the largest ETF in the gold industry. We've seen a huge surge as gold's gone up over 20% this year in 2016, while the stock market is down a little bit. So we've seen this huge dichotomy in the two assets. So on Friday, the money was coming in so fast to gold ETF called GLD that BlackRock had to suspend sales because they didn't have enough gold, even on a fractional reserve equation, to have the gold there to accept the orders. So we're seeing what I've been talking about, that we're seeing, and Jerry keenly looked at his technical work over the weekend, and many of you received a buy signal in gold, and we're talking about physical gold this time. So we are well underway that we think recovering. Not to tell you there won't be times that it goes up and down. We all know there'll be pullbacks, but the trend seems to have changed now that gold's gone from 1062, 1,062 per ounce, up to 1275, where it is as I record this. So this is huge. The other thing is buzzing around Europe is still the anticipation of how much gold China has as they prepare to get their special drawing rights from the IMF, and starting that in September. So sometime between now and September, they still have to announce their tonnage of gold. Like the US has 8,163 tons. They're the largest holder of gold in about 75%. Even though the politicians want you to hate gold, that's what we have all of our reserves in as a country, if the gold is really there, which is much debate about that, which we won't get into today. But watch that number, because if that number is anywhere over 3,500 tons, and if it gets close or more than what the United States has, as China has not revealed how much gold they're holding and purchasing since 2009. So this is going to be very, very interesting coming up. So keep your eyes on that, because by the time that happens, it could be too late. The other two things that have happened since we talked is the gold silver ratio got all the way up to 82.5, the second largest ratio it ever had, which triggered a lot of people switching from gold to silver, or people just buying silver outright. We got a huge week in silver last week and anticipate another one this week as people realize the shortage. And David Morgan this week in his announcement shows that the mining of silver is going to be cut back in 2016 between 5 and 10%. So overall, when silver moves, it's going to be huge. Some people are saying we're going back to a 50-to-1 ratio, and it could happen when gold gets to 1,500, silver could be all the way at 30. I know that sounds crazy, but if that were to happen, gold would go up 25% from where we are right now, and silver would go up nearly 90%, just like it did in 2011, when silver went up 92% in 1 year before it had the big correction down. So anyway, you need to be accumulating silver quickly, and gold is money. There's something going on. We see central banks buying, and more gold is moving to the West. The other thing is, last Monday, over a week ago, I had a very long conversation with one of the largest wholesalers in the world, and one that I do a lot of business with. And he's talking about the supply problems they expect later in the year. He says really as early as April, but probably more like September, October, November, because they see the supply dwindling and not going up. We see the warehouses bare, and I'll talk about that in just a second. So just keep in mind that buy when it's not in a panic, because there's nothing you could buy, nothing, for insurance better than gold and silver, because say it went down 20%, which is not, but if it did, you still bought an insurance policy against all these bail-ins, money being taken from your account, potential 401k freezing, and all these problems. So the one last thing, I want to give that example. We had a question about it, is yes, on January 26th, we woke up and 73% of all the gold for delivery in COMEX warehouses had been taken out. The amount left represented only $88 million. And that day, the price of Apple stock dropped 375 times 88 million, to show you how thinly traded this gold and silver market is right now. And any kind of shift, and the shift has started, but it's not big yet, and you'll see $50 and $100 days for gold going up. In silver, you'll see $1 and $2 days goes up, because the stuff won't be there, and the people that want immediate delivery will have to pay a big premium to get that. So hopefully you've been following, you're staying tuned in, you're reading, you're staying abreast, you're changing your asset allocation. The ones that want gold and silver in a self-directed IRA needs to call us. And if any of you are still holding rare coins, you need to call and discuss it with us. And you can reach us at 800-247-2812. That's 800-247-2812. If you're not getting our email blast, you can go right to a page here, Jerry's at ftmdaily.com/gold, or you can go to the precious metals button and you can sign up for our email blast that we don't share with anyone. It's completely, we'll never tell anybody we have your email address or sell it. So if you don't like it, you can always unsubscribe. So hopefully we've given you a quick update what's going on, but things are changing very quickly and could spring forward at any time. With this week's Precious Metals Market Update, this is Tom Cloud signing out.